Property markets are stagnant or in steep decline all the way around the world. And of course, we know property is just part of a much bigger picture, which involves a ruptured global financial system, recession, job losses, and huge fiscal blowouts as governments try to prop everything up. So is this the time to go off and hide in a cave, or is it time to go shopping? Here's Tim Murphy.
Well, let's not pretend it's been a difficult 6 months, 12 months for lots of people out there. But of course, opportunities always come at the most difficult times. And I really believe right now, with the deep discounts that apply in so many great markets around the world, developed markets where there are not the same risks as we normally need to take to make money, I absolutely believe that the next 6 to 12 months, I can do more with my net worth and pals of mine and clients than I've ever been able to do with it in the 15 years, 20 years I've been buying property. And probably even several generations, this opportunity right now is completely different from anything we've ever seen. It really is an opportunity now where if you look back in 5 or 10 years and you didn't buy assets at all, but certainly real estate assets, we know inflation's coming, we know real asset values are going to go up again, we know there are discounts, real discounts of 50% in many of these markets. People will be kicking themselves.
What makes this a buying environment?
Well, you see, you've got a lot of developed markets around the world which traditionally just held no value, particularly the last 2 to sort of 5 years. Markets got so expensive, people got so greedy with property. Those markets are suddenly depleted by 30 to 50%. So great yielding opportunities, but in safe environments. You don't need to go to China or India to make money anymore. You can go to the UK or Australia. Very, very different from what we've seen in almost the last decade.
Do you still have a sense that global markets overall will continue to fall?
Yeah, I absolutely do. And I know we'll talk about the UK later, but there's no way the UK property market has reached the bottom yet. But what do? Do you wait and wait and wait, and then by the time you get in, you've got funds. There's a lot of funds sitting out there waiting to pounce on these markets. If you look at the UK, these auction sites and these auctions that get run, they're packed at the moment. So I think it's got further to run, but I still believe if you see value and it stacks up, you should just take it.
So if you're earning in a US-connected currency, like we are here in Hong Kong, the trick is then to work the currency play as much as the property.
Absolutely. I mean, so exciting. I've been offered properties in the UK right now that are up to 50% discounted on 2 or 3 years ago. And okay, you can say, right, well, the last year of the property bubble was 20 or 30%, so it's not that exciting. But if you can get to 50% plus, you're talking about 3 or 4 years of a bull run. But if you add that up to a 30 or 40% gain on the currency swing, then that gets really interesting. So, okay, UK property market comes off another 10%. So what if the currency rebounds over time? Because there's no way the US is going to stay where it is now. Everyone knows that. Safe haven is a bit of an oxymoron, but that's what's happened. Everybody's gone to Japan or the US to invest their money at the moment, and that's going to change for sure. It's happening in yen already. Right? That's weakening off now.
In this process of reassessment, are you now of the view that emerging markets are not necessarily the best way forward?
That's a very good question. We really believe that Asia is, of course, a key driver of global economies, and we believe that it will bounce back a lot quicker. But that's conventional wisdom tells you that Asia is certainly handling this crisis a lot better than previously and will continue to do so. So we'll be back investing in Asia very shortly. But right here, right now, there are superb opportunities in markets where there are very little risk. Okay, there's economic risk in the short term, but we believe the UK, Australia, the US offer such great value. But for the next 6 or 12 months, that's where our core focus will be. And
so what have you learned?
Oh, so much it's not funny. IP has been focused very much on helping people make money for 3 or 4 years now in the way I've been doing it for nearly 20 on my own property portfolio. And we've turned much more into caretakers in the last 4 to 6 months really, where people are asking a lot more questions. They're obviously very concerned with their net worth, and we're really hand-holding a lot of people and helping them through the process, and rightly so. There have been challenges with mortgage lenders and 1 or 2 markets, but we've really been there for people all the way through, and we're very confident that everything stacks up that we've done for people, and people have made money. I mean, in the main, people have done extremely well out of their investments with us. Some have sold, many are holding through, and I think they should be holding at the moment. And it will just stand IP in very good stead for looking after our clients moving into the future, but of course importantly now seeing great opportunities to make people money over the next 5 to 10 years.
So there's no doubt in your mind you're switching from a defensive position into a hunter-gatherer position?
Absolutely. I don't think we can afford to wait. As I said to you before, property markets in some of these areas may come off 5, 10, even 15%, but you can't afford to wait too long and wait for that to happen, because you may well miss out on opportunities. We all know, I know that, that there are REITs and private equity businesses just hovering. There are still people with money out there, big funds, hovering, waiting to take opportunities, distressed asset opportunities in the UK. There are already some in the US already. If we don't do it now, by the time some of our individual clients try and do it, the market will be gone from under them, because it's going to be big funds that take a big first step to come and take these markets on. And if we don't do it now, we're going to miss great opportunities. And as I say, play that yield and ride the market through.